So look, if you want to grow your wealth, your income, and increase the amount of time off, then these are the shortcuts that can help. Welcome to the Wealth Creation Podcast. Welcome everybody, it's Dan Latto speaking. It's been a while since we've done these. We've just been really busy. What can we do? We've been doing podcasts every single day, which has been awesome, generated lots of leads, closed lots of business, and that's very good. But now we're back into, 3 times a week. Monday is the business growth show. Wednesdays is a property cash flow show. And Fridays is a mindset and hustle show. Today, I believe, is a Wednesday. I keep getting confused over what day it is. But we're going to talk about property. And in particular, I want to talk about whether now is the right time to be investing in property. We're on the 7th of October. So we're October, we're going into Christmas. We're right in the middle of a pandemic. Are we in the middle of a pandemic? Are we at the end of a pandemic? Are we at the very beginning of the pandemic? Is this 10 years more pandemic yet to come? Who on earth knows? And I said to my wife last night, I said, could you imagine if we went back to the Dark Ages, whenever they were, 1200 AD, whatever the Dark Ages were, and they had this coronavirus back then, it would be called the plague. Kids would be singing Ring a Ring of Roses, which apparently has nothing to do with the plague. But we wouldn't have had the technology with which to deal with this. But today in 2020, we have got the technology. And even though the science is there, people sometimes ignore the science. But for me, we got to think that this is how life is going to be for the next couple of years. And so if that is the case, is now the right time to be buying property? And what changes are we seeing on property right now? So for me, the changes that we're seeing, so Boris yesterday announced a 5% deposit for, I think, was it first-time buyers? Look, I don't think that's going to change anything. Boris promises an awful lot, doesn't he? Do we trust Boris? Do we believe everything that comes out of his mouth? Probably not. Is it a distraction away from the fact that we had 12,000 new cases and 25,000 people hadn't been tested properly and all of that kind of thing? Is it a distraction? Who knows? Does Donald Trump actually have coronavirus? Who on earth knows? And I don't like to speculate on that stuff because I have no idea what's true and what's fake. And honestly, it's got nothing to do with me, and I believe it's got nothing to do with you either. What we should be focusing on is what is good for us. And so for me, for the last 20 years, it's been like this. So this is 0, this is 20 years. Now, there's 2 things that are going on with property, okay? So the first thing is property prices. And what's gone on with property prices? So in the last 20 years, where's 2008? It's about just under halfway, isn't it? So this is 2020. This is 2008. So it probably went like this, and then it dropped, and then it's probably gone back up again. These are house prices. And you'd be going, yeah, but if I was listening to advice saying I should be buying now, and you bought in 2007, 2008, you took a big drop right there, and so you shouldn't be doing that. But bearing in mind that I was still buying in 2008, okay? And yes, my house prices dropped, but there's another axis that you need to think about, not an axis, another line that you need to think about. And the line that you need to think about is rental prices. And unfortunately, I've only got a black pen here. But rental prices are going like this. What's the best way of doing it? The rental prices are going more or less like this. That's what I think is happening. The rental prices are constantly going up. So the start of the rental price here versus the difference here, if you draw that line across, this is why I'm a cash flow investor. Now, we know that these rental prices are constantly going to go up, and there's a good chance they will continue to go up. Even with a 5% deposit, and now first-time buyers can get on the market because they don't need a bigger deposit, they still have to pass the requirements of the mortgage company. They still have to pass affordability. They still have to do all this extra stuff. We're not going back to the good old days in the 80s where it was just 5% deposit. And how much money is the government providing for this? That's the question. And will it run out? And can people access it? And anything that the government does is basically screwed up anyway. So why on earth would anybody trust anything that the government even says? We don't trust them about anything. Did Boris even have coronavirus? Has Trump even got coronavirus? Who the hell knows? I don't trust anything. Dominic Cummings had coronavirus, so to test his eyesight, he got in a car and he drove a couple of 100 miles. Do you trust that? If you trust that, you need to start looking at what you should be trusting and what you shouldn't be trusting. I wouldn't trust the government as far as I could throw them. What I do trust is my own opinion and the way that I analyze what's going on here. And so are we due a crash right now? Our price is going to plummet back down to 2008, 2009 levels. But you know what? If that happens, let me just see. Yeah, you can still see this. If that happens and prices plummet, do you think we're going to go back up in 2030? You see that? Yeah. Our price is going back up in 2030? Of course they are. Because what happens over time is that prices are constantly going up. Yeah, it looks like that. But over a period of time, prices are going up. But there's something else I need you to understand. And this is dependent on what type of investor you are. So I'm a cash flow investor. I like to invest in property or assets that is going to give me a cash flow every single month. And I've been doing it for 20 years. And honestly, for the first 10 years, it was hard. It was a struggle. We couldn't afford the repair work that we needed, to constantly have an input of tenants. But as time gets better, rents are going up. And obviously, lower interest rates help right now. But even if, we stress tested our portfolio, and if interest rates rise quite significantly, we'll actually come out of it quite well. And I would suggest that if you haven't stress tested your portfolio yet, there's people investing in property at age 25, age 26, age 30, and they've never known an interest rate more than 2%. That's all they've ever known, and they think that is normality, and that is totally not normal. When we were getting mortgages, one of my interest rates were like 7.5% back at the time, maybe 6.5%. I can't remember. But this is the thing I need you to understand. Okay, when you're buying a property, so let's say you're buying £100,000 property, okay. And you put in, let's say, £70,000 down as a deposit. And we know this, don't we? We know that in 10 years or 20 years, the idea is that this is going up in value, and that's probably going to be worth a bit more money. And let's just say in 20 years' time, it's worth 150. Let's just say. It doesn't matter. It doesn't matter if it's still worth 100 in 20 years or if it's worth 150 grand in 20 years, because as a cash flow investor, I'm actually looking at paying this down as fast as I can anyway. I don't care. That could be worth £1 million. And would I get excited if that was worth £1 million? I might sell it and buy some stocks and shares. I might amortize. Is that the right word? Amortize that. I might bring it all together and take my asset off the table. One of the things, differences between professional gamblers and amateur gamblers is that the professional gambler knows when to take that money off the table. Very, very important thing to know when to do and how to do it. But right here, you've got a £70,000 that's being paid every single month. So your rent is, let's just say on this, your rent is 600, and let's say your mortgage at two and a half grand. It's about £200 a month, let's say. Is that about right? More or less, about £200 a month. So you're making £400 a month profit. That's awesome. How many of them do you need? 5 of those is £2,000 a month. Now you can retire or leave work and go into property full time or start your own business or whatever. So you don't really need many of these at £400 a month to get you £2,000. Okay, but there's something that you're forgetting right now. The thing that you're forgetting is that today, right now, the rent is £600. So what if? I notice you're putting comments in, so I'll come to comments in a minute. What if at £600 a month in 2020? What if in 10 or 15 or 20 years this is increasing? What is this going to be in 20 years? Well, it's got to be a 50% increase in 20 years. If prices or inflation is 3% every year for 20 years, that's 60% without any compounding whatsoever. Let me see. What to stress test, buy or not to buy? I'll come on to that. So this is going to go up in value as well, £900 in 20 years' time, right? It's got to do 50% increase. Like I was saying, at 3% without compounding, it's 60%. So, are you going to get with compounding? Maybe would this double? Maybe £1,200. Bear in mind that your mortgage is only £200. So now you're talking £700 a month. And if you imagine the 5 that you've got, that's £3,500 every single. You can't see that, can you? It's £3,500 every single month coming in.
just based on, there you go, you can see that. Just based on 5 properties with inflation pushing up the rental values. Now, there's some assumptions in here, and of course the assumption is that rental values are going to keep going up. You still owe £70,000, but £70,000 in 20 years' time is not worth the same £70,000 as it is today. If inflation again is 3% over 20 years, you've wiped out 60% of the value. A Mars bar is £5 in 20 years, not the £1.50 that it is today. And what happens here? This goes up to £150, maybe. And you can either sell that, and if you're going to sell it, then you're making a difference here of £80,000, which is really nice. Or you might just want to keep it. For me, I'm a cash flow investor. The whole point of this is to keep all of this and pay this amount off. Let's answer some of those comments that came in. Thank you for commenting, by the way, Maureen. Thank you so much. So how to stress test. Let's do that now. That's the first one. And then afterwards, you actually said to buy or not to buy. Now, I'm not a financial advisor, so none of this is financial advice. But honestly, I would be buying often, as many as I can, which is what I've been doing for the last 20 years. So there's something called dollar cost averaging. And if you don't know about dollar cost averaging, go to Google, type it in, I'll write it down for you. Dollar cost averaging. And basically, in a nutshell, what it means is, if this is the stock market and you're putting £100 a month in, this is, let's say 50 shares, let's do it, 25 shares, 75, oh no, that's wrong. Let's just do it. Yeah, no, that's pricing. Okay. So this is pricing, £25 per share, £50 a share, £75 a share. If you're putting £100 into dollar cost averaging every single month, you know, if you're buying here, you can only buy like 1 1/4 shares. Okay. But if the price drops, you can buy 4 shares, 1.25. You can buy 4 shares. So I like it when prices drop. That's brilliant because we can buy more shares for the same £400. And then when it goes up in value, it's now worth £75. That 4 shares that I bought at £25 each, now worth £75 each. 4 times 75 is 300. I've just upped the 100 to 300. So this is dollar cost averaging, but you need to check on Google. They'll give you a really good example. But that is why you should be buying. I mean, if you can buy 1 property a year, brilliant. If you can buy 1 every 6 months, brilliant. If you can buy 1 every 4 months, even better. 1 every 3 months, 1 every month, 2 every month, 3 every month, 4 every month. That's the plan. Because then it doesn't matter what these prices are doing as long as your cash flow is covered. So for most people, one of the problems that they have is they buy a property, they do it up and sell it, and at the point of selling it, brilliant, life is great, they've got 10 grand, that's great, and then they've got no money for a while. And then they have to buy the next one, and now they've got some money, life is wonderful again, they can buy nice things, and then they've got no money anymore. And then they have to buy another one. And they're like this for the next 20 years. And I know people who've done this for 20 years, and they never have any money. They never take time off because they can't, because this is their time off. They have no money. Whereas for me, we've been buying as many properties as we can every year, and rental values, or I should say profit on our portfolio, just goes like this. So at year 20, and this is year 0, I'm here. And my costs are actually going like this. Whereas this guy who keeps buying and selling, buying and selling, buying and selling, gets himself into trouble an awful lot of the time because he keeps selling the asset. Now he has to do it again and do it again and do it again. But this right here, not a lot of profit to begin with, more profit. This is as a rental cash flow investor, which is what I am. This is why we invest in such a way. This is why when we go paddle surfing on a Wednesday morning, or whatever that happens to be, I can do it because I wake up and guess what? Money's coming. Whereas if I'm out on site and I'm building a development or I'm refurbing a house into a HMO, and I'm constantly having to sell, like you should be buying a couple and holding on to them. And if you want to do refurbs, that's great. But you could do a 3-2-1 strategy where you buy 3, you refurb 2, and you keep 1. And then the next year you do it again. You buy 3, you refurb 2, and you keep 1. And over a period of time, you too will turn into this. This is really where I want everybody to be, because I don't think anybody should be working for a living. I would like everybody to, let me rephrase that. I don't think anybody should be forced to work for a living. I think everybody should have the choice of whether they want to work for a living or not. And a lot of people haven't got that choice, and that's what bothers me. This is what allows me to do whatever I choose to do. Yesterday we had a meeting with our head content coordinator. This morning we had a meeting with our Facebook ads lady. Like, it's up to me. On tomorrow we've got the whole company. We're all going to have a Zoom call, first time in the company, because the company's grown so fast. We've got like 10 members of staff now in the digital marketing agency, and it's just grown. I don't know some of these people. But I've got that choice. Or if I want to sell it, I can just sell it, or give it up, or go backpacking around Europe, or do whatever. And the reason I can do that is because my cost base is low, and over the last 20 years, my income has gone up. That's the only reason. There's no magic or special power or anything like this. The problem is that for most people, for some reason, they do not want to invest. And I get it. It's really hard, because, if you're putting £20,000 down into a property, into a rental property, and you're only getting £200 a month, it doesn't sound like it's a lot of money, and it's not a lot of money. So why would people do it? And so people don't do it. And then after 20 years, the internet's going really slow here, by the way, so I hope you can hear me okay. And then after 20 years, they end up with no assets. And that's it. They're done. They've got no assets. So should you be buying right now? The answer is yes. But you've got to watch what you're buying. You can't be doing the stuff that you're going to be buying and selling constantly. You've got to be buying and selling maybe, and then adding to your portfolio of properties. So you're building a bigger portfolio of properties as time goes on. Anyway, that will do it for today. Thank you for joining. We're live again on Friday. Come and join me for that, and we'll catch up with you then. My name's Dan Latto. Take care.
Hey, it's Dan here. Thank you for listening. Really appreciate each and every one of you. Please click like or subscribe to the entire podcast.